How to do futures trade entry checklist. We are about to have a blast talking about everything you need to know when you're looking to enter a trade in the futures world. And also, I want to draw as many parallels as possible to some of the cryptocurrencies that are moving around. Dogecoin, I think, up over 100% on the week, Mikey. Is that right? Yeah, that doggy coin continues to move. Coinbase is IPOing today. That's going to move around a lot. Am I the type that jumps right into those markets and starts, scalping, creating long-term, long and short positions? No, not necessarily. But what we're talking about here today can absolutely lend to anybody looking to trade Coinbase or Dogecoin, but hopefully you're looking to trade the small exchange products, and we're absolutely looking to add some of that cryptocurrency flavor to our futures offering. So with that in mind, I'm going to focus mainly on our US dollar product today, but like I said, as we develop this checklist, what I look for and what I would advocate most traders look for when they go to click send on any trade, a lot of parallels between any kind of product type that you might put out there. So the focus on US dollar, we'll talk about Coinbase and some other cryptos that are on the move. Before I can do that, I must make our compliance person happy here and put this disclosure in front of your eyeballs for just a couple seconds. You don't have to read it. You don't even have to keep your eyes open for this segment of the presentation. I'm going to get in trouble for that. But with this disclosure in front of you for a couple more seconds, we can move on to the fun stuff here, what you came for, which is t-shirts and a trade entry checklist, because it all starts with an idea, right? Like hopefully when you go to your platform, when you go to a specific product, a specific market, futures, options, just outright stock and ETFs, you have some idea of where a market might be headed. And this is really all you need, I think, here in 2021, given the great access from different trading platforms like Tastyworks and Robinhood and everything down the line, and also the great revolution of accessible product types, options, weekly options, even in some cases daily options, and then the small exchange futures here, accessible product types for everybody who just has an idea of where a market might be headed. But that usually isn't enough to just go straight from idea to potentially profitable strategy in the market. So what I want to do today is illuminate that middle ground, get you from initial idea to execution with just a couple of items that you can jot down on a piece of paper before every trade, or just think about in your head and just make sure, check, I'm ready to trade. Because, a lot of times you do some research via number crunching, looking at realized volatility, implied volatility, standard deviations, and everything else. Or you read some articles, and all of these different items, whether you're trading off fundamentals or you're trading off of statistics, they combine for, at the end of the day, something that you want to test out with your money in the market. Paper trading or simply having an idea over cocktails is one thing, but seeing that idea come to fruition because you read a bunch of research papers or you went into your Excel spreadsheets and crunched the numbers yourself, that's what we're really all about here, is seeing those profits and losses roll in based off of your opinions and research. But how you enter the trade can be just as important as that initial idea. The strategy you had, all the research that you did, can at the end of the day be useless if you don't know where to trade it or if you choose the wrong product. This happens constantly, and this is honestly part of why the small exchange was created. One of our core tenets is to simplify this process from idea to execution, because how many times have you had an idea on interest rates or foreign exchange, our exemplary product here today, and you have to second guess, like, if I want yields to go higher, am I buying or selling this thing? Is this the right product, the 10-year or the 30-year, ZN, ZB? Should I go to the ETF? There's a lot of questions that come up, and I want to hopefully, get you to that solution in an easy process, an easy checklist. And it all starts with a couple of questions that are going to create the foundation for that checklist. Number one being, do you have the right market? You're reading about movements in the Chinese renminbi or the Mexican peso or any of these different currencies. And when you go to trade it in whatever platform you're trading in, are you picking the most directly correlated product to your idea? And this might seem, a lot of these questions today, it's funny, it's going to be a running theme, I think, throughout. A lot of these questions might seem like, well, Frank, that's stupid. Of course you want to go to the right market. Of course you want to go to the right product and everything down the line. But when you get to a platform, it can be daunting. And so I want to start with, do I have the right market that I'm even looking at here? And then, do I have the right product? Because one of the great things about how far finance and trading has come is there's a great influx of different products, ETFs, futures, options on both, micro futures, small futures here from the small exchange. But with all of those different chances that you have at trading a market like FX, are you picking the right product that works for you in terms of size and volatility? I think a lot of you out there, myself included, have been burned by having a good idea, going to the right market, but picking a product that was too big. That's usually the story, but also too small as well. You pick the right idea on the US dollar, you go to shares of UUP, for instance, and the thing moves a couple pennies in your favor. I did all that work for a product that was too small and not volatile enough. So it works both ways. Am I picking the right product here? From there, and this might be the funniest one and might be the seemingly dumbest one, but at the end of the day, probably one of the most important, am I picking the right direction? Seems obvious, but ensuring that the direction that you choose coordinates with your idea is oftentimes taken for granted. And this is especially true in the world of foreign exchange, the world of interest rates. And we've done a lot with our products, with the small US dollar, with the small 10-year yield, and we got the 2-year and 30-year yield as well that we just added, to make it pretty easy to be like, okay, if I buy small US dollar, that means I want US dollar to go up. But it's not so easy when you look at some of these other products like the euro dollar cross, or if you are looking at euro yen cross, and it's like, man, like if I buy or sell this thing, what do I want to happen? Or if I'm looking at shares of TLT, there's always that second guessing. I include myself in this, and I came out of college trading interest rates at the Board of Trade. Whenever I go to trade TLT directionally, I always second guess myself before I click send. Am I picking the right direction here? If I buy this thing, do I actually want yields to move lower or bonds to move higher? What is the direction that I'm actually taking? Does it coordinate with my idea? So that's another one there. And then finally, after those three big questions, market, product, direction, then we start to get into the numbers, and we're getting real close to actually trading here. And this is, another one that might seem obvious to some of you out there, is like, oh, well, if I wanted to buy US dollars, I did my research, I think that US dollars are going to move higher relative to these other currencies, then I just go in and I buy it wherever the market is. That might make sense for someone who is trying to be extremely aggressive here, but if you haven't really thought about it before, and you do see sometimes that strategy of going straight to the market and buying it wherever it is oftentimes resulting in some, instantaneous losses, then maybe you do want to move that buy order a little bit lower because you're sick of starting every trade down $5, $10, $15. So, are you being too aggressive? Are you being too patient? This works both ways. Once again, I have plenty of friends who, of course, inevitably they want to trade shares of Tesla, or they want to trade the different cryptos. Today, a great example for this as well, Coinbase IPOing. If I want to buy this, I think it's going to move higher. Do I just go straight to that market and buy it wherever it is? Or do I say, this is an IPO. They're really volatile around going public here. I've seen these other stocks when they go public. Snapchat a couple of years ago, they move a lot, many dollars on that IPO date. Does it make more sense for me to, say the market is due to IPO at 100? Does it make sense for me to just go right in there and buy it wherever it opens? Or do I put that buy order in down at 95 or 90 and wait to get hit there? But then you run into that flip side of the problem of, if I get too passive, if I'm looking for too much patience, I'll probably never get hit. And that was the funny thing with my buddy a couple years ago is I think Tesla was trading around like $200 or so, and he was like, I want to buy some shares. And he was like, where do you think I should buy them? And I was like, well, market's at 200. It moves, at least a few dollars per day. If you're not in any rush, I put an order in to buy at like 190 or 180. And he was like, I put in a buy order to buy at $50. And I was like, dude, you're never going to get hit on that. So it is finding a good balance of aggressive and passive with your entry. And then finally, and maybe most importantly, we've really made a play for making this important in all traders' minds, is having a realistic exit. And this is what closes out your checklist here today. And we're about to, really put together this checklist into one succinct slide and then dive into it with a real world example. But do I have exit mechanics that, one, will make my account still feel comfortable and will allow for me to open my platform tomorrow or next week without having exceeded losses of 20-30% of my entire account? And then two, am I being realistic? Once again, like Tesla trading around $200 a couple of years ago, trying to buy it at $50, that's not realistic for an entry point. And then also, like for today's example of SFX, if I'm looking to buy the US dollar here via the SFX futures, they're trading at 146, and I want to create this bullish strategy for the next couple of days or weeks. If I'm waiting for $1,000 per one lot or $2,000 per one lot, this market moves just a couple $100 every couple of weeks. That's not realistic on trade exit as well. So all of these important pieces coming together for today's trade entry checklist, which consists of these 5 essential questions. You got your idea, you open up the platform, you're ready to take it to execution. Do I have the right market? Do I have the right product? Direction, entry, and exit. These are the questions that traders must check off, the boxes they must tick when they want to finally commit an actual trade in the small exchange products. In all products, the Dogecoin run up of the last couple of days, that's one where it's like the market's real volatile there, and my entry, should I be more aggressive or should I be more passive? If I'm just looking for the short-term action, that entry for a market like that should probably be a little bit more aggressive. It all is up to you when deciding the right market to choose product, direction, entry, and exit. But hopefully we can wrap around some context and statistics to make that process a little bit easier. So say you want to trade foreign exchange. Do you go with a really broad product type, a really specific one, or something in between? Because I've seen this and I've done this before, where you want to trade, for instance, you got a hunch on where Asian currencies might be headed, and you choose to go maybe too broad with it, and you put in a trade on Asian equities, which, yeah, of course, they do have some correlation to yen, Chinese renminbi, and the different Asian currencies, but you've engineered a stock trade, like being long some Chinese or Japanese stock ETF is not the same as being long the Chinese renminbi or the yen. There is a correlation there, but you've gone so broad that you've maybe engineered the wrong trade. Now, do you go super specific? Do you go for yen versus US dollar? You had an idea on this whole continent with many different dynamics, and now you are really mainly exposed to what happens with the Bank of Japan or specific ins and outs in that Japanese economy. did you want that specific risk there, similar to, a stock? You got Coinbase IPOing today. Do you have an opinion on that company, or do you have an opinion on companies that are correlated to cryptocurrencies? Because those are very different things. Coinbase has different executives, different operations departments that are different than semiconductor stocks and everything else. So going super specific definitely makes sense for some people in some situations. Like you go to Coinbase today because you want to trade that specific stock, that IPO. But if you had an idea on cryptocurrencies or companies that have correlation to cryptocurrencies, they work in that sector, then Coinbase might be a little too specific for you. What we did with foreign exchange and trading currencies is, in general, is we created a middle ground with what I'm calling a US dollar basket. So what you have here now is a market that gives you exposure directly to your currencies that you wanted. You're not kind of getting tangential to it. You're not trading stocks that are associated with, like I said, Asian currencies or European or what have you. You're direct in the currency world, but you're diversified across all the different currencies there, and you've got direct diversified access to FX markets with this currency basket. I think this is a real great place to start in the FX world, and this is what we try to do with all of our foundational products here. We do the same thing in metals. Metals have been moving around for the last year plus, and a lot of people have ideas on silver, on gold, but they don't know if they should go directly to one of those assets. Should they trade the ETF or what have you? We have the small metals futures there that baskets them together so you can get direct yet diversified access to that market. It's a great starting place. And then if you get more particular with currency trading, then go to those currency crosses. Trade. I know people get as crazy as not only euro versus US dollar or yen versus US dollar, euro versus yen. You start pairing them all against each other. It can be a lot of fun, but this is a great starting place if you've just been doing some research in foreign exchange and you want to take that idea to execution. You got a pretty good market. Now, product-wise, this is where the small exchange really makes their worth, so to speak, which is towing the middle ground between standard and really comfortable looking ETFs and stocks, and then efficient but large traditional futures. Those for the longest time have been the two options for all you everyday traders out there when it comes to product type. I got the market here. I've got US dollar. I can go to UUP. That's a nice ETF. It's US dollar. It looks like different stocks. It looks like just a $20, $30 stock that I'm used to seeing in the market there. You buy or sell a couple of shares or you try to trade options on it. The thing doesn't move, okay? And it still ties up 50% of your capital to trade however many different shares of that. That's no fun. It's standard. It looks like the rest of those stocks and ETFs, but doesn't move enough. Futures, great. Okay. Well, the DX futures that come from ICE, but now have ridiculous market data fees, and I think a lot of platforms said, to hell with it, we're not even providing these futures anymore. That's a product that I could go to. That's dollar futures. It's not asking for 50% in terms of that margin. It's asking for less, 1, 2, 3% in requirements. That's efficient. That's really nice. Oh, the product is how big? Hundreds of thousands of dollars. That's too much if you're trying to get in there and trade foreign exchange for the first time. Too slow with the ETFs, too fast with those traditional futures. Small futures smack dab in the middle. Looks like a stock, feels like 100 shares. Every penny that ticks is $1, and efficient like the futures. I think the capital requirement in SFX, Mikey can correct me if I'm wrong, but I'm pretty sure it's at about 1.5% capital requirement relative to the size of the product. Real efficient, and in a size that looks and feels hopefully normal to you, the everyday trader. And this is really essential because I've seen it too many times where someone has the right idea, the right jump on a foreign exchange market, and it doesn't end up moving enough for them. They make $10, $20 over the course of a couple of weeks with those UUP shares, and they thought they were going to make at least, $100, $200. Right, nice middle ground there with the SFX. And of course, the other extreme is the absolute worst thing that could happen, which is you get too big, and before your idea ends up being right, hopefully, the market has moved a few $1,000s against you and you have to get out. That is absolutely no fun either. So you got the right market. Hopefully you've got the right product here. The small exchange futures, of course, this content is sponsored by the small exchange, so I'm doing a little bit of biased pitching here, but the small exchange futures really do, I can confidently say, pair that efficiency of futures with that simplicity and comfortable feel of just 100 shares of your favorite stock or ETF. Great market, product. Am I in the right direction? This is where things can really go poorly. I've done my research. I've crunched my numbers. I've got this jump on whether US dollars are relatively cheap or relatively expensive. I go in there and I've engineered the wrong direction. I check in on a couple of days because I'm reading some news items that are saying that what my hunch was right, and I'm actually in the red because I chose the wrong direction. Because, I mean, let's face it, we've done a lot of work to get people more comfortable with different asset classes. 10, 20 years ago, the everyday trader wasn't looking at trading foreign exchange. Are you kidding me? It was just stocks and maybe bonds. And this stuff isn't necessarily easy, but hopefully we made it easy for you here at the small exchange. If you're bullish dollars and you're bearish other FX, it's hopefully as easy as buying US dollar or buying these SFX futures. That's what you want to do. If you think that US dollar is going to go up and the rest of those currencies are in tandem going to go lower, that's how foreign exchange markets work, then you buy the SFX futures. If you think the reverse, if you have done your research and you think this US dollar is going to dust, there's no value in it, it's going to continue to depreciate against the euro, the Canadian dollar, Australian dollar, Japanese yen, and everything else, then you simply sell it. It's really, in my mind, in my 5+ years of trading and working in education on different markets, this is as easy as it gets. I don't have to go in there and pick a particular cross, and I don't have to think about it for an extra 5 minutes like, okay, I want XYZ to happen, so I buy it. Or no, wait, do I sell it? Because I know you've all been there with me before, where you take those extra, couple minutes to really think about it. It hurts your brain. And sometimes I've even closed my platform because I've gotten sick of having to think about it for too long. Small US dollar futures, making this direction question a lot simpler here. It's as simple as buying the market you think will move higher and vice versa. And this is, an interesting case here with foreign exchange, but also futures at large. I think a lot of people who come from stock, ETF, options on either, they tend to think like, well, futures, that's a different derivative and it's got an expiration. And what do I want to happen if I buy it? Well, if you buy it, you want it to go higher. And if you sell it, you want it to move lower. It's really as simple as that. And thankfully, with the small US dollar product, making foreign exchange trading as simple as you want US dollars to go higher, you buy the darn thing. You want them to move lower, you sell it. So there we go. Okay, we're more than 50% the way through our checklist here. We've got the right market, we've got the right product, we've got our direction down. Now, let's get into some numbers, some live data that's moving around, and put in that buy or sell order. And these are the three options that you have when you go to any market and you go to execute on that idea. None of them are necessarily right or wrong. Of course, as you could probably tell, those first couple checkpoints on the checklist, I had a little bit of a bias to them. But when it comes to where you want to enter this order, it really has to do with the market that you're looking at and your trade strategy. Going back to Coinbase's IPO today, this is a market that if you're looking to, you really want to get in, you really want to buy or sell this thing, you want to take that opinion to execution, before stuff gets out of hand because you think that now that it's IPO'd, it's going to really just break loose in your direction, then yeah, you probably want to be aggressive and you want to go right to that price, get that fill in, get your exposure down before it runs away from you. That being said, a volatile market like Coinbase on an IPO day or Dogecoin this week that's moving hundreds of percentage points in a matter of 24, 48 hours, also lends to this idea of like, I can chill out on this buy or sell order and probabilities tell me that like I'm likely to get hit at some point, because when you have higher volatility, you got a market that's really moving around. What does that mean? Well, that just means that it's hitting more price points in smaller fractions of time. So if I want to get long this thing, if I put an order that's 50 cents, a dollar, a couple dollars below the market, I'm pretty likely to get hit. So I can hold off on it as long as as opposed to that first idea, as long as I'm not in a rush to get that exposure on. I can be a little passive with that entry. And same on the sell side. If I wanted to sell any of these markets, especially if they're really volatile, that means that I'll probably get hit in the next couple of minutes to hours to days, as long as that volatility continues and it doesn't just trend and shoot off in one direction. Now, that being said, that's all well and good for your cryptos and your Coinbase IPO, and hopefully what'll soon be small cryptos here from the small exchange coming very soon to all you traders out there. But when you're looking at foreign exchange, a traditionally low vol market, and right here we have 146 is pretty much where SFX futures are right now. They move, if anybody's looked at them in the past, I've crunched the numbers here for you today. On average, they move about 50 cents. So if I'm looking to get long or short US dollar exposure, and I put in an order that's $5 or $6 away from where the market is, I'm probably not going to get hit for weeks. Okay, so, and maybe that's what you're looking for. Maybe you're saying, I'm not in a rush. I think that this dollar is going to continue to depreciate, and so I think I can pick it up at a lower price. Then fine, but keep that in mind that if you're not realistic with these entries, you're not going to get hit for a while here. I usually advocate for a middle ground, especially if you're looking for short or medium term opportunity, you're scalping markets, you're being active, then it's a matter of not going straight to where the market is. Oh, I just read this on Twitter, or I just, got done with crunching these numbers in Excel, and I need to go straight to this market and, hit the bid or lift the offer right now. That's usually not the case. Would I wait for many dollars worth in SFX to get in? No. But I would say, hey, if I want to buy it, I'm going to put an order 20, 30, 40 cents below the market. Once you start getting outside of 40 or 50 cents, you're probably not going to get hit. So it's really a matter of finding that middle ground here in your entry, because, looking at the chart in SFX really illuminates it for me and really makes my case for the balanced approach just with this graphic, which is, market at 146. Do I go right to 146? Hey, maybe that makes sense in some instances. Do I go all the way down to 140 if I wanted to buy US dollars? Well, the market hasn't been there in the last year's worth of trading. It's not even at the lows for the last year's worth of trading. It would take probably, you could see here the last time it was close to 140 was back in January. It would probably take months to get down to 140, and there's a good chance that it won't even get there for the foreseeable future. So maybe that's too far away, but what I can do is I can say, well, I know this market moves about 30 to 50 cents on a daily basis. It's at 146 right now. I'm just going to bake in a little bit of that realistic expectation to pair with my entry here, my opportunity, and that's where I, as Frank, the individual trader, the everyday dude, that's where I usually go with this type of stuff. Now, last piece here, and then we'll get into just hitting this the t-shirt giveaway one more time to make sure that you're all set up for that, and then some questions here in a second. The last piece, but a piece that I think really should be planned for before entry, and that's why it's on the trade entry checklist, is your exit, because the last thing you want to do is get that right market, get the right product, your direction is all settled, you're ready to put in that buy or sell order, you've got the right entry level that you like, and you didn't plan for exit, and you get filled and the market takes off, and now you're scrambling, especially if you are trading the Coinbase IPO. The last thing you want to do is be like, all right, I checked off all these boxes. I'm here. I'm at the right product. I'm in the right position, the right direction and entry and everything else. I buy it and I'm instantly up or down a couple $100. What do I do? Where did I want to get out? What did I think was realistic at the outset? Am I being greedy now by I'm up a couple $100? Oh, now I want to wait till I'm up 1,000. Oh, now I'm down a couple $100. Was that too greedy? Solve those questions before you trade any product, and especially when you're looking at the small exchange futures. Here, it's usually about time frame and pairing what we talked about on the entry, realistic expectations, with what your time frame is here. Going back to this example, market's at 146. It moves about 50 cents on a given day. If I'm looking for just like a scalp, an intraday trade, $20-30, that is a nice profit and loss marker. If I have a long-term approach in this market, if it moves 50 cents or $50 notionally on any given day, then I know, like, extrapolating it over a couple of weeks or a month or so, a couple $100, that is appropriate there. And then the middle ground approach, once again, none of these are necessarily right, but they're good to pair with what your approach is for any given trade, any given market. Middle ground is always nice. I'm not looking for an intraday scalp, but I'm also not looking to hold on to this thing for more than a month. $100, that's a nice middle ground here for trading US dollar futures at the small exchange, because that wrong entry can really, really hurt, that wrong exit really hurt before you even enter the position there. Because, and I get this all the time from, I've been, before small exchange even launched, I was kind of like the futures dude for a lot of the content over at Tasty Trade. And one of the biggest things, I would say probably the biggest piece of feedback that I got on the negative side was like, I'm uncomfortable. Like, I'm uncomfortable in this trade, and these futures are too big, and I didn't think about it beforehand. And it's not one of those things where I'm like, well, too bad. That's the way that it is. Of course not. The small exchanges made smaller products, but to feel comfortable in this new futures trade that you're looking to put on, you have to think about that exit beforehand and create a fitting exit, like plus or minus $20 or $100, like we're looking at here in SFX. Any of you who've traded NASDAQ futures, for instance, know that that's ridiculous. It moves $20 or $100 in a microsecond. So that's absolutely not realistic. And if that is the exit that's comfortable for you, and you're trying to attribute that to NASDAQ futures, then you shouldn't be trading those NASDAQ futures. And so it's really, thinking about the exit is I think one of the most essential things that we've done from the content creation side over the last couple of years in futures, because it creates for just a better experience trading futures. You don't get to that uncomfortable point that I think a lot of people get to. And that is it. That's what I got for you on the trade entry checklist. We start with the right market, the right product. Do I have my directions all set, especially when I'm trading derivatives and these foreign exchange or interest rates, these really interesting but a little bit more complex asset classes? Make sure I got the right direction. And then entry and exit, absolutely some of the most meaningful pieces there. And we think that they're so meaningful that we give our subscribers these numbers on a weekly basis to create those realistic but opportunistic entries and exits via standard deviations and realized volatilities. And here you can grab those numbers for this week, and they change every week and we update them, but at least what you're looking at here in front of you with the standard deviation and the 5-day forecast specifically gives you a little bit of guidance for trading all the small exchange products. And you can maybe jot these down and think about them next time you go to trade the sticks. Small technology stocks continue to move back and forth here. Thinking that you were going to get $4 or $5 on a scalp, that's too much when you look at the standard deviation of a single dollar there. So look at these numbers, formulate those realistic expectations around them. And people have been loving that 5-day forecast as well. And what we also do is we update correlations, ETF share ratios, and futures ratios too. So you can get a little bit of that, the question from earlier, which is, the right product. If I'm in the metals world, I'm looking at the SPRE column there, the small precious metals, does it make more sense for me to trade SLV, or does it make more sense for me to trade the micro gold contract? You can kind of see how big SPRE is relative to those futures and ETFs, and you can check in on the correlations too, to make sure that you're choosing the right product. And then also what this is more designed for is creating those really fun, really cool pairs trades that we've been doing. So this is another one where you can jot down some numbers and see if the smalls fit your trading, and also if you want to do some pairs trading with the equities, the interest rates, metals, and foreign exchange. Because at the end of the day, we love the smalls here. We know they're not going to be the only products that you trade out there, but we really think that they're worth a try here because they are bringing all of those great pieces of futures trading. Everything that you've heard, why are these guys always talking about trading futures? Why do they even exist? They bring those benefits, the efficiency and everything else, the direct exposure to foreign exchange and commodities. They bring those benefits of futures to the everyday person. They make everything more accessible here at the Smalls. So we hope that you at least check them out. We got equities, foreign exchange, commodities, we got the metals and interest rates, and we're adding another commodity here in a couple of weeks. Finally start to see maybe an oil product trading from the small exchange, so hang tight for that. And with that, everybody, that is how to do futures, the trade entry checklist.